Should you form an LLC for your side hustle in 2026? Let's cut through the noise. A lot of people rush to create an LLC thinking it's some kind of magic tax-saving button. But the truth is, for most people starting out, an LLC doesn't automatically change your tax bill. It's a legal shield, not a tax strategy by itself. The real tax savings come from how you choose to be taxed, not from the letters LLC after your business name. So let's get this straight from the start. If you're a solo business owner, what the IRS calls a sole proprietorship, and you form a single-member LLC, guess what? By default, the IRS taxes you exactly the same way. All your profits flow directly onto your personal tax return. You pay your regular income tax on it, plus the dreaded self-employment tax. The LLC provides liability protection, separating your business assets from your personal assets, but it doesn't change that fundamental tax calculation at the federal level. The real question isn't just LLC or no LLC. It's when does the beautiful simplicity of being a sole proprietor stop being efficient? When does the extra paperwork and cost of a more formal structure actually become worth it? To answer that, we need to talk about the engine that drives most of the tax stress for side hustlers: self-employment tax. In 2026, self-employment tax is a combination of two things. First, there's the Social Security tax, which is 12.4% on your earnings up to a certain limit. So where do the legendary tax savings actually come from? It's not the LLC itself, but an election you can make with the IRS. It's called an S-Corporation election, or S-Corp for short. An eligible business, including an LLC, can file a form with the IRS Form 2553 and ask to be taxed as an S-Corp instead. Here's the core idea behind the S-Corp strategy. Instead of every single dollar of profit being subject to that 15.3% self-employment tax, you split your income into two categories. The first is a reasonable salary. You have to pay yourself a wage, just like an employee. This salary is subject to payroll taxes, which are basically the same as self-employment taxes. But here's the key. Any profit left over after paying your salary and other business expenses can be paid out to you as a distribution. And these distributions are generally not subject to self-employment taxes. That's the potential goldmine. You're only paying the 15.3% on your salary, not on the entire profit of the business. But wait, there's always a trade-off. It's not a free lunch. Once you elect to be an S-Corp, your administrative life gets way more complicated. Suddenly, you have to run payroll for yourself. That means withholding taxes, filing quarterly payroll reports, and issuing yourself a W-2 at the end of the year. Your bookkeeping has to be perfect, and you have to determine what a reasonable compensation is for the work you do. You can't just pay yourself a $1 salary and take the rest as a distribution. The IRS is very strict about this. All of this adds costs: payroll services, accounting fees, and your own time. This structure only makes financial sense when your self-employment tax savings are significantly higher than all these new administrative costs. So, let's get practical. What's the break-even point? Well, there's no single magic number. A common rule of thumb is that the S-Corp conversation starts to make sense when your net profit, that is your income, after all your expense, consistently hits around $40,000 or $50,000 a year and is expected to grow. Below that, the administrative costs and headaches of running an S-Corp will likely eat up any tax savings you might get. Here's a simple decision framework for you. If your side hustle is brand new, your income is unstable, or your annual profit is pretty modest, just stay simple. Operate as a sole proprietorship. Your number one priority isn't a complex legal structure. It's building a clean system for tracking your income and expenses. But if your business is maturing and your net profit is becoming consistent and substantial, let's say over that $50,000 mark, that is the time to sit down with a tax professional. You'll want to compare your estimated self-employment tax bill with the expected costs of running an S-Corp, including payroll, bookkeeping, and accounting fees. Now, let's talk about what actually creates real savings in the early stages. No matter your structure, your expenses, and your documentation. This is where so many people leave money on the table. Every legitimate business expense you track and deduct lowers your net profit, which in turn lowers both your income tax and your self-employment tax. Think about it. For 2026, the IRS standard mileage rate for business use of your car is 72.5 cents per mile. If you drive 1,000 miles for your side hustle in a year, that's a $725 deduction right there. But you need proof. Clean, consistent mileage tracking is one of the easiest and most powerful ways to create defensible deductions. The pro move from day one is to treat your side hustle like a real business, even if it feels small. Get a separate bank account and credit card for all your business transactions. This makes bookkeeping a million times easier and creates a clear audit trail. Keep all your receipts or use an app to digitize them. And once a month, spend just 1 hour reviewing your finances. This simple system makes your deductions stronger, gives you a clear picture of your profitability, makes any future change in your business structure, like moving to an S-Corp, a smooth transition instead of a nightmare. If you do decide that an S-Corp election is the right move, timing is critical. You have to file Form 2553 with the IRS, generally to have the election apply to the entire current year. You need to file it within the first 2 months and 15 days of that tax year. If you miss that deadline, the election typically won't take effect until the following year. There are some relief provisions for filing late, but you really don't want to rely on those. It's much better to plan ahead with your accountant to make sure your timing is perfect. So, let's wrap this all up into the best blueprint for your side hustle in 2026. First, start with the simplest structure that works. For most, that's a sole proprietorship. Your main focus should be on creating a rock-solid system for tracking every dollar in and every dollar out. Second, understand what truly drives your tax bill, that's self-employment tax on your net profit. Third, only upgrade your business structure when your profits are consistent and high enough to make the administrative costs of an S-Corp worth paying. Don't rush into complexity. Build a profitable, well-documented business first, and then optimize your taxes. That's the smart way to grow your side hustle. Thanks for watching, and don't forget to follow for more tips to help you build your business the right way.